stocks back near these record levels, some investors stick to the old Wall Street adage, sell in May and go away. But what are some of the world's biggest money managers doing right now? I want to bring in Guggenheim Partners Global Chief Investment Officer Scott Minerd with more than $240 billion under management. Scott, it is good to see you.
It's great to be
here. Thank you so much for joining us. So do you agree with that adage, sell in May and go away? In other words, sell right now and don't invest.
Well, it's interesting, Maria. Statistically, it's been demonstrated that that actually works as an investment.
Wow.
Yeah. And given what we've got on the horizon, we've got the Brexit vote coming up in June. We have the Federal Reserve decision on interest rates in June. If they don't go in June, then we've got to go again in July. So, there's some turbulence ahead, and I think it would be a good time to sort of reallocate away from equities into fixed income.
So you're raising cash?
Well, we're not raising cash, but we definitely are putting more money to work in fixed income, particularly high-yield bank loans and actually some Treasury securities.
I want to ask you about the most vulnerable areas of this market, but you mentioned Brexit, and that is, of course, Britain considering leaving the Eurozone. That referendum vote is June 23rd. If they decide, Britain, to leave the Eurozone, what kind of ramifications do you think that holds?
Well, I think it raises some serious questions about the European Union in general. And if a country can leave, what does that mean for the rest of Europe? So I think that'll be bad for stocks in Europe. And I think that could lead to some spillover into the U.S. market and into Asia if we see a hard sell-off after the Brexit vote.
Especially with the banks. A lot of people are saying that the banks are most exposed to something perhaps negative happening with Britain leaving the euro.
Well, definitely.
U.S. banks.
Right. Well, I'm not too concerned about U.S. banks right now.
Because a lot of the banks have a lot of exposure to, for example, London.
Right.
They've got trading desks and big operations in London. What does that mean if London leaves?
Well, look, it's not going to be good for earnings in the near term. And banks in our country are struggling given the continual change in regulations. So I think that, though I think banks aren't a great place to be, I don't think we're in danger of seeing a failure because regulation doesn't let banks do much of anything anymore.
Obviously, this weekend was the big Omaha event. Liz Clayman sat down with Warren Buffett and Berkshire Hathaway Vice Chairman Charlie Munger yesterday. She got their take on where they're putting their money and how the economy looks now. Let me let you hear this soundbite. I got to get your reaction. Listen to this.
Anybody that's bet against America since 1776 has eventually lost the bet. This country works. It's worked better for all classes virtually every 20 years.
These guys have been at it a long time. They've been right. The economy does come back. So what's your take on the backdrop for investing right now?
Well, I think right now that we have a put at the Federal Reserve. Anytime the market gets itself into severe trouble, the Fed just goes on hold. And if necessary, I think they would actually reverse course and maybe reduce rates again. So I think they are right. For the next 2 to 3 years, I think the economy is in pretty good shape. But, Maria, we're in a phase of the rally in equities right now where we've moved beyond the fundamentals, and people have got to believe that somebody else is going to be out there to take them out of their stocks. So, given that earnings are not growing the way they have been, stocks have sort of reached a speculative wave, and I think that while for the next year or two we could see stocks, over the next 2 to 3 years continue to go up, that we're at the point in the rally where people should be thinking about selling.
What has worked this earnings season and what hasn't worked? I mean, I know that technology is having a tough time in the first quarter, and that was the growth story of 15.
Right. Well, I mean, the earnings in general are challenged. We're going to start to see a recovery now, I think, in energy stocks. I think that's a good place to go. I think countries, emerging markets that have been under big pressure are going to start to recover.
You do think so? It's been a long time. We're waiting for the emerging markets to come back.
And I think that now that we've got commodity prices stabilized and oil, we may go revisit the lows again, but the worst of the oil stories behind us. So countries like Brazil, Chile, places that have just been horrendous places for the last 5 years are probably places to start looking to put money to work.
Wow, and there's you're really looking at the bottom in Brazil or close to it with there's impeachment talk and now with all of the sort of blood on the street, not really, but you know what I mean, you would buy in Brazil.
I would look at our own history. When Richard Nixon was forced out of office, the stock market rallied for the next 3 years. Okay. So it's generally, these kinds of political turmoil situations are usually signs of a bottom, and it's a good time to start, increasing your allocation. I wouldn't jump in with both feet, but it would be definitely wise at this point to have an allocation.
So you said for the U.S. market it's time to start raising cash or reallocating, putting money into fixed income, even treasuries, you said. In terms of the stock market, if you are invested, is there any place to hide? What do you think is most vulnerable, and what will be a place to hide if, in fact, we do see markets get a tough summer?
Well, look, I mean, places to go like utilities, consumer, non-discretionary stocks, things like that are places that you can hide. But, on balance, Mary, I think you're better off just to, take some money off the table and go somewhere where you can get some safe haven assets like fixed income treasuries and see how the summer evolves.
All right. We will leave it there. Scott, great to see you.
Great to see you too.
Thank you so much. Scott Meinert from Guggenheim. Be sure to